Hey everybody, and welcome back to the fun and exciting, we'll call it the happy half hour conversations that me and Mike Reed have here together every so often. And today we're going to define a little bit at a high level. Tons of information out there. Don't be lazy. You can go figure out exactly what that is. But we are going to start to answer that question of, is accrual worth it? So I'm not the one to answer that question. Mike's the guy. And Mike, let's start this off with maybe let's define what this is, right? At whatever level you choose, but what exactly is accrual basis accounting?
I'm going to start with a reality check. A reality check in which we look at our business and we identify that all the value it's producing, what are the rewards that are left over? That financial statement, that P&L, it's a report card. Here's net income. Here's what happened at the end of the day. It's that reality check. And we have to really value a financial statement, specifically a P&L here, when we're thinking about net income and understanding how our efforts, how the business efforts came to fruition and produced a net income and sometimes a net loss. What was that reward that came out of it? That's the reality check that is faced when you look at that P&L, regardless of what our feelings or thoughts are and what happened. Accrual basis accounting is dialing that in. It's the most accurate way to depict what that reward really was. And so what accrual is, the accrual basis of accounting, it's taking what happened in real life and what the real life things, the actions, and aligning them with more precision on a P&L and a financial statement. So when I look at that P&L and I look at that report card and I say reality check, what happened here? What happened in the business? And I look at that net income number, I can really know with clear accuracy what it was.
It's a great way to put it. Great way. And I know we can go into many levels of depth, I imagine, with this and cash basis. And by the way, I love your sign that's behind you there in your office. Says, "Oh, this calls for a spreadsheet." You know, I have to say it in that poetic voice too, because it's like it should be your ringtone. Remember back in the day when you used to have songs and that as ringtones? That could be yours.
And we paid for them. We paid for those ringtones.
It's like $2.99 or something too. They used to get you, but
my phone's on silent all the time now. I don't even
because you're in the numbers, man.
Changed.
You're deep in the numbers. You can't have anybody bother you.
No.
So this one is interesting, right? So, and I hope that gave people the highlight, right, of what we're actually looking at. And I know we're going to get into the weeds with this a little bit and figure out, what it is. Is it truly worth it for a business to go this route versus another? So maybe even, walk us through some of this stuff. I mean, you obviously deal with a ton of clients, at y'all's firm, and the examples I'm sure you'll bring up throughout this conversation, but where do we even start with this one, right? Like, we've identified it. Now what? What's the next step?
I get questions as to, do I need to do accrual? Should I do accrual? At a certain point in time, businesses have fully grasped it. They're off and running. So those questions are over. But quite honestly, even when a business is doing accrual, there are situations that require a little more attention, a little more work. And so I would like to address all of that. The start of just the triggers as to when you start on this and then how it goes from there. Because just because you've already started on that track, you need to consider what you're doing, if it's really producing that accurate result, which is what accrual can do when you're really matching the real life thing with the financial statement on a very timely basis. That can be very valuable when used properly. Okay, so triggers. Why would I do accrual? Where am I going with this? Well, there's a couple of requirements. If you're going off of what the IRS says, and the rules change periodically, it's a gross receipt number, 30 million over 3 years. If you just start hitting those marks, then the IRS is going to say, hey, you need to file a tax return on accrual basis, which means you're going to have to do your books on accrual basis. If your business is Also, growing in general, a lot of the time you start needing to get funds, larger funds or loans from a bank. You might be getting larger funds from investors. And a lot of the time when we start borrowing money at different levels for growth in our business, those stakeholders are going to say, you need to have US GAAP financials. And when we start talking US GAAP financials, we start talking accrual basis because, again, it's the most accurate method that aligns what really happened. And so individuals who have more stake in your business because you've borrowed their cash or the business has borrowed their cash are going to want to see something more accurate and for that accounting game and financial responsibility to step up a little bit.
And I'm sure if anybody's ever started a business, right, you're asked either by somebody or something, right? Like even, I mean, this is years and years ago, but I remember setting up my own QuickBooks. Anyway, I might even be before QuickBooks Online, and it asks you that question, right? Like
Yeah.
accrual or cash, and you're sitting there like, well, maybe, but I want. It's almost like the fork in the road that you don't know how to answer the best way,
Uh,
right? And at some point, and it's funny, we joke about this stuff, right, with certain topics like this, and we see it enough. I mean, heck, I even see it enough, and I'm not a tax professional or an accounting individual, which thank God I have people like you, or I would be literally the poster child for a disaster. But, this stuff is intimidating, I think, for some people, right? And I think it's one of those things that I don't even know really what to relate it to an example, but it it's like you have to make a decision. You go one route or the other, you try it and this, but you can't be switching, every 3 months. It's not like you're going to a what's the buffet, like a Golden Corral or something, right? Well, let me just try this over here and, maybe next time up I'll try this one. You can't do
right.
that. And I mean,
No,
well,
that's
you
fair.
can, but you're hurting yourself really bad, right?
Yeah.
And then if you guys did that and you've worked with Mike, then you get to see the mean Mike face when he's got to deal with something like that. So it's oh, this calls for a spreadsheet up there now till you piss him off with bad
Yeah.
numbers. So you're good. It's a whole nother side of Mike Reed. But
Yeah, going back and forth, if that ever became a situation, you'd need some other help than a spreadsheet. A spreadsheet would not be your solution. It's probably much more complex than that. It is interesting, though, that you do have programs, situations out there, you're in QuickBooks, and there's this button right there that says something. It almost kind of forces you to think, oh, what am I doing? Should I be doing this a certain way? That is, there was only a little more explanation, maybe a little bullet point or something to guide you there. Talk to your tax professional, though, right, Johnny? You already said that a lot. Hopefully, a lot of the time, they're going to lead people down the cash basis route, unless, again, there's a requirement. Or the other thing I always say is performance. Regardless of the requirement, does your business just function in a way where you just need to do some type of accrual? Maybe it's not all the way accrual. Maybe it's modified cash. Is sometimes when you're in the middle, where you just need to identify some of it just to understand what the heck is going on around here. A lot of the time, if your business has a lot of inventory that's coming in and out, there can be some timing of making large purchases versus when you get revenue, and it can be confusing and distorting on a P&L and a balance sheet. Construction, there can be some interesting timing, percentage of completion as to when you get the receipt for the cash versus how much cost you put into the project. That can be something that throws our eyes off when wanting to know, hey, did things really work out like they were supposed to? Other times, if you're just in a business where you get some large sum of cash that's supposed to feast you for the next 12 months, that can be a little distorting as to when you get cash, as to how long it's supposed to last you. Because again, we're matching out those expenses and revenues accurately over time. You should be a person engaged in reviewing your business financials frequently anyways, but if you're going to the method of accrual, you most likely really are involved in up-to-date financial performance reviews. You want to know what's going on monthly or at least quarterly, because again, if it's going to give you more accurate results right now, then you're probably interested in reviewing it right now versus later on people who do bookkeeping a little bit behind and catch up, per se. There's those situations.
It's great you mentioned construction, right? Because those guys got a lot of moving parts going on, a ton, especially if you have multiple projects going on and people and, so there's different payment schedules with different roles in this. There's a lot of stuff, right? And I
Yeah.
can imagine, like, even using that, not getting off this topic at all. And
Mm-hmm.
Mike's like, "Oh, great, you promised me before this that you wouldn't," but I am a little bit. So it's, if anybody is basically a solo shop, right? Say you're a graphic designer or something, you're a consultant of some form. Think about how easy you have it compared to somebody who, right, you have multiple projects going on. Like I said, multiple people, different payment schedules, budgets that change drastically, all the stuff, right, rolled into one. How complex does that get? And then imagine not being able to keep track of it or having trust in it that it's actually doing a good job of doing a real-time snapshot of where you're at. You could frankly, you could lose your ass
Oh
really
yeah.
quick because you don't know where things are at, or they're just misassigned, miscategorized, I guess we can say. And yeah, that's pretty serious. So really going into it, right? Like having a good understanding of what system or basis
Mm-hmm.
you're on, right? Why you're on it, and then really how it works, even if you're not the
Yeah.
one doing it, right? Like even if you have a bookkeeper, I think it's always a good idea to have a general understanding of what they're up to. You're basically just outsourcing or farming out, as some say, the time commitment of doing it, right? That doesn't completely relieve you of any responsibility of knowing how it works a little bit, though, right? Is that fair to say?
Right. No.
Yeah.
You've got to understand how this works for sure to keep tabs on it. And I will say this, accrual, again, there's the benefits. There's the level of accuracy, right? And it helps us in complicated accounting situations. Every business has its complication, and I never want to discount the idea that whatever industry you're in, oh my gosh, I'm working so hard. Yes, you are, but there is a different accounting that may bring relief in a business that doesn't have to do accrual if they don't have to, versus one where there's, again, to what you just mentioned, a lot of moving parts, specifically when you get into inventory and projects. Oh my gosh. And every business is complicated. It has its own niche of trying to keep up with all the things that are business. But the accounting element, you're definitely bringing in more complication when you bring in accrual. So the benefits better be there when you do that. That's the idea.
Makes sense.
Yeah.
Makes total sense right there.
All right. I want to give a couple reasons to say no to accrual. And if we can
Just
get
say
over
no.
the reasons, if we can get over the reasons to say no, then the answer of saying, yes, this is a good idea is I have accurate, timely financials that give me great results and I know what's going on. That sounds like a pretty good yes right there, right? So let me give you some reasons to say no, even though that yes sounds pretty good.
Yeah. And then here, Mike, you'll laugh at this one. Every time I hear a cruel basis, I always think of a cruel. Like it's a cruel system for somebody who
Thank
doesn't
you for that.
understand it. And
I've
maybe
never thought that.
maybe I'm just
I'm so
super
happy you told me that.
immature. I have no idea, but that's what I hear all the time. But anyways,
I'll,
let's learn how to say no to this thing when it's appropriate, right?
let's find out how to say how a cruel is cruel, huh? All right.
I hope it just lives in your head now for the rest of your life.
Oh, it will. Trust me. Okay. You have to work with somebody who gets it. And I'm really emphasizing gets it. Not somebody who talks about it and conceptually who really gets it. And one of the situations I've found myself in or heard other people talking is there's this common trend of people or circumstances, and this is the accountants doing it too, not just an individual like a manager or a business owner. Accountants do this, picking and choosing what entries to make based upon motivations, based upon pressure, based upon their opinion. At the end of the day, just like cash basis accounting, accrual basis accounting has standards and it has rules. It is what it is. It's what really happened in real life. Okay, and I have a story to tell, but before I tell that story, I want to bring out a little artifact that I've got back here.
Prop
This is
time.
this is my hat box. And inside of this is a cowboy hat. Johnny, background, I rode horses when I was younger. I used to wear the cowboy hat that's in here quite a bit. Every other weekend when I was riding my horse and going to horse shows, blah, blah, blah. It was a fun time. So it wasn't uncommon for this hat to have dust on it, because when you're around horses, there's dust in the air. It's just the natural environment, right? Well, I got this cowboy hat out the other day just to show my kids for fun, and I thought, oh, this thing's been in my closet for a while. And I thought, well, this dust, I don't know if you can kind of see it on the camera there,
Oh, yeah.
kind of wipe it. This dust right here, it didn't come from a horse show. It came from just sitting in the corner, not being used for many, many years now. I guess my horse riding days have gotten a little rusty. Okay, so here's the reality of the situation. Here's the reality. Here's the reality check. Here's Mike Reed's reality check, right? We started the podcast saying that this item was something I use all the time. It was a very useful piece. It was an asset to me. It was an item. It was fun, whatever you want to call it. I wore it. And yeah, I had a little dust on it from horse shows, but it hasn't been used in a really long time. It's become obsolete to me and my lifestyle. I don't ride horses anymore. I love it. I'm not getting rid of it. I have too much emotional attachment to it. But at the end of the day, this is not dust from the horse show. This is dust from not being used. I have to come to reality that my horse riding days have become very rusty, and that this hat is essentially more or less an obsolete item to me. That's just what it is, whether I like it or don't.
It's like somebody holding onto a Nextel. They're like, oh, I love this phone. This thing's
That's
great, but I don't get any service.
Yeah, exactly. Sometimes we like to hold on to that stuff just for fun. Okay. Story time. I was at a plant working with people doing an inventory count. We got to the end of the inventory count. We made various accounting adjustments to accurately reflect inventory in the balance sheet. And by doing so, the P&L had a negative result. There wasn't much reward. Let's put it that way. And the way the accounting works is that if you adjust obsolete inventory and the way the accrual method would work, it could all of a sudden reflect a better reward, could reflect a better net income. And at this point in time, I was talking to the manager and booking the accounting entries based upon the appropriate standards that I know. And they said, well, hold on, what about obsolete inventory? That's my piggy bank. I said, a piggy bank? What do you mean by a piggy bank? Well, yeah, if you make that adjustment here and you put it here, it'll make positive net income. And I thought, oh no. Again, obsolete inventory would be when I go out to the plant, I take my fingers just like I took on that box and I wipe my fingers on it and I have dust from that inventory sitting in the corner. That's just the reality of the situation. It's what really happened in real time. We value that. We don't value our pressures, our motivations, my emotions to this box as to what we want it to be. And with accrual, when you're making entries that are not based on true black and white cash entries, these types of situations sneak into the financials. I hate to say it, but they do. And the truth of the matter is you have to be really honest about what the standards say and just book it as is. And sometimes it is a positive result and sometimes it's a negative one. The worst thing I can do is to say, yeah, it's a piggy bank and make that entry, because it's not reality. It's not reality anymore. We have to really work with somebody who really gets it, who really understands the rules, and really can look at all the items in the financial statements, not just the P&L, but the balance sheet. You're going to have to love balance sheets when you do accrual method and all the items on that and how to tie them out, because that's where the reality starts It moves over to the P&L, and that's when you can get good analysis and understanding and accuracy.
And if you don't have that, you got a storm.
That's right.
Being a number soup is what maybe we should call it.
Yeah. That brings me to reason to say no number 2. When it works, it works. And when it doesn't, it doesn't. I mean, it really doesn't. There's another story that I had. I was working with a client in construction, and they were doing percentage of completion oriented accounting. And they had those list of projects that you were mentioning earlier in the podcast. And this one's on track here, this one's on track here. And they had this really beautiful work paper and schedule that demonstrated all of this. Well, they were having an off year, and they didn't have much cash. And they were going through and trying to update their financials and make sure they were accurate and and we were looking at the work paper, and there was a line item on there that just was a general accounting entries. And I said, what is this? What does that mean? And they said, well, that's just an entry that my accountant was doing for me. And I said, well, yeah, but what does it mean? Well, just the entry the accountant is doing. At the end of the day, what did I say in the beginning of the discussion? It's a reality check. It's what really happened in real life. People booking an entry doesn't mean anything unless it's associated to something that really happened. A project is real. A project where somebody is going out and swinging a hammer and cutting wood is real. And there's an associated cost with that. Hours, materials, all the things. Not an accounting entry. The accounting entry is representative of something within the context of that. So just saying it's an entry, that's what this person over here doesn't tell me anything. So guess what? If it doesn't have meaning, it has to go. And there's only one place for it to go, from the balance sheet to the P&L. And guess what that did? It increased their income, which means they had more in tax to report when they didn't have much cash.
That's a bad situation.
It's a bad recipe. When it works, it's beautiful. You know what's going on. When it doesn't, it doesn't. So you got to understand there's more entries than just one cash item that comes in your bank. All the accounting. There's reconciliations and work papers that have to make sense in a sensible way of what's really happening, and tied out and reviewed more frequently. Preferably monthly, at least quarterly, not annually. More people with more expertise, more time, more energy. What is this all saying? Your accounting bill is going to go way up. You have to pay a lot more for an accountant who knows what they're doing to make sure it's accurate. When it works, it works. When it doesn't, it doesn't.
You better know what you need and why you need it.
Yes.
Frankly, I think it's probably the best way to put it, right? Like, don't just do it because you click the button on QuickBooks and now you think you have to.
Exactly.
Interesting.
Yes. And a lot of the time we just kind of click the button, we toggle it back and forth, and we're looking at one item here and one item there. If you're doing it, go all in on it. This is how to tie this account out. That's how to tie this account out. What is receivable? What is payable? What are the elements of that? Because a lot of the time what's happening in business isn't always reflected by a few postings in QuickBooks. It goes beyond that. At the end of the day, when you reflect back on the circumstance, and if we're going to click that button to say accrual, and we're going to really do it correctly, we want to find somebody who gets it. And there are good reasons that we know that's going to be accurate, and we know it's going to work. What is your ROI on it? Is the time, energy worth it? Well, if I'm a growing business and I'm required to be on accrual to get funds and to have US GAAP accounting, it probably is, because you're about to boost to a different level. You need to do that. It's probably worth it, right? If you have a complex business with lots of things going on and you don't know what's going on, yeah, it's probably worth it. You don't want to be flying blind. That could be a big problem. The ROI has to be there, is what I'm saying. because it is a beautiful thing when you can look at something with accuracy and timing. But if you don't if it's not worth the pain and the time and the energy to get this and elevate your game, that's okay too. I've had we could put together great budgets and great forecasts that compensate for the timing of cash. If I expect my cash to be in this month to supplement me for this period of time, depending upon the size of your business, if you can forecast that and budget it appropriately, you'll be fine. You don't need accrual. What other mechanisms may you decide and to pick and choose financially before we business decides that the accrual method and everything it's involved in there is really required?
It's like, is the PITA worth it?
Mhm.
Right.
Yeah.
And if anybody doesn't know what PITA means, PITA, just Google it. I'm sure you'll find it. We don't have to educate you on what that means. Right. That's a whole nother topic.
PETA, it's accrual. Johnny, you're just hitting me with all these right now. I appreciate it.
You're like, I got to bring something to it, but so look at this. So obviously we got the reasons to say no, right? In all seriousness, they're very good reasons, right? It's not saying no. It's just not working right now. Might be something you grow into, right? Eventually down the
Yeah.
road. And they're really with this. I mean, where do we start to kind of wrap this one, right? Like, how do we present this to people? Like, what do we may have missed in this conversation that sometimes people ask you about? Like, is there anything specific, or, you gave two really good examples. I think the construction one was fantastic. Like what is something you think somebody's going to message us and ask, say, oh, I have this other question about this absolutely cruel accounting practice. Is there anything you hear a lot?
Yeah. Every business has a unique situation, and they're less unique when you look at them at a macro level. And I don't mean to diminish anybody who has that unique circumstance. But typically it's usually a source of revenue. I get this revenue at this time and in this way, or the timing of when somebody comes to me and says, this is what's happening, and when I get the cash is just too far apart, and conversations internally within the office are really difficult to manage. And there's a belief that you have to be accrual. My recommendation on that situation is to not go and use accrual necessarily. It's to really say, is that issue something that cannot be a workaround? Can you not forecast or budget and bridge? If there's too many factors, then it's going to be really difficult for a workaround. Explore the modified cash basis. Cash basis is pure just when the cash comes in. Modified cash is you're starting to bite off accrual entries without going the full-blown US GAAP. I have to be accrual. I'm going to elect to be accrual, and I have all these processes and circumstances. Identify the real pain point. Look for the workaround. If it's not there, consider more of a modified cash basis, which is, in a sense, a fancy way of just saying, do a little bit of accrual accounting.
Mm-hmm. That's a good way to do it. So really, if you go the modified cash route, you can tweak your recipe as much as you need without anybody telling you exactly how to cook it, basically.
Exactly. And that won't work if you have USB requirement. The requirement is a requirement. You can start to work around this before you're required to be on accrual, before you're required US GAAP financials. Modified cash basis is not those. But it's the next level up. Consider that.
Makes sense. And really, this is a great place to stop. I think this one, but we got to come back and visit this. I mean, heck, I think we just burned through 30 minutes of going into this. And, one of these days we'll do a comparison between some different types. I always love these conversations, right? Because I feel like we talk a lot about tax specifically, not anything TTF, naturally, given the name. But accounting, I think sometimes people, I wouldn't say they forget about it too, but they think of it as, well, as long as it's done. As long as it's done, and it's out of the way, right? But if it's done wrong, then everything else is, it muddies the waters, we should say, right?
And not to extend the conversation any longer, but I love that you brought up tax and the concept of that, because tax flow, right? That time when I have to pay tax, and there could be various reasons for that. Think about that example when my balance sheet was wrong and I had to throw a bunch of income entries onto that P&L and I didn't have the cash flow versus accrual accounting. Accrual has a massive impact on that tax flow concept. Can make for a good day or a bad day.
Oof, yes, I can imagine. So let's keep this going. Obviously, Mike, we got some great topics we'll be talking about, and it's funny you mentioned could be a good day or a bad day. Well, I think anybody who's taking the time to listen to this is going to have a good day, or you're
So
really going to have a bad day because you realize you've been doing something you don't need to be doing. So
that's fair.
And you, anybody that's listening to this, you are the judge of that. But talk to your tax professional, talk to your bookkeeper. If you have a CFO, a fractional CFO, anybody, I mean, just get your arms around a little bit of what goes into this. And who knows, maybe this is an opportunity. If you're a business owner, you have somebody that's doing your books for you, doing your taxes, take them out to lunch, pick their brain a little bit. I'm sure they would appreciate the fact that you want to know more about what they're doing. Of course, unless you're a total micromanager and they're just like, stay in your lane, buddy. Don't come anywhere near me. I'm buying my own lunch. Get out of here. So on that note, take this, share it with somebody. So I know a lot of business owners, as birds of the feather flock together. If you're listening to this, you are already a business owner yourself, share it with somebody. Share this with some contacts. What you can actually do, which would be fun, is listen to some of the other conversations me and Mike have had over the past couple months, especially, and then go quiz your buddies and see how much they know. Heck, you can make a drinking game out of this if you really wanted to. There's a million ways to have fun with that. But as always, though, we will have Mike back on again and again and again. And we'll keep these conversations going. So everybody, thank you for joining us on here. Obviously, questions, shoot them to us. Anything you can think of. One day we'll do, try to stump the accountant, and we'll just start throwing rapid fire questions at Mike. But until then, make sure you also subscribe to the TTF YouTube channel here where you're listening to this. And we'll see everybody next time back here on our little fireside, happy half hour chats, whatever we want to call these things. So have a great week, everybody.